let's get started. So, macro charting, NFP levels for indices, SPY, QQQ, IWM, presented by Andre Three Stacks. Let's dive in. So, I've been testing NFP levels pretty much all year, and I think it's time to talk about them. They may be the most important levels for gauging the market from a macro point of view. So we'll be going over what is non-farm payroll, how to chart, implications of these levels from month to month, why you should add them to your strat, and then if you have questions, save them for the end. So understanding NFP. So NFP measures the number of jobs added or lost to the US economy over the last month. And so this excludes farming, as the name states, private household, nonprofit, and active military employees. So pretty much it's like the core payroll that they're tracking in data. So NFP serves as a key economic indicator. It can influence Fed policy decisions on interest rates, which turn into impacts for most stocks. And there's some stocks that are more highly sensitive to rates. So it's like this whole data loop that like one data print affects the other, which could affect the other. But I think the core of it all is payrolls, and it's not really talked about, which ties into unemployment and some other things, which all lead to economic rates and if they're going to raise or cut. So from a historical perspective, these levels usually create a top or bottom zone for the month or a range to monitor for that month. So the key indices that I like to track for this, which gives me a whole perspective on macro, like I said, which would be SPY, we know what that is, QQQ and IWM. I will say though that IWM is more sensitive to some of these data prints because all of these stocks are very highly sensitive to rates. And it totally makes sense for these small caps. They can't afford to borrow money at high interest rates, so it stalls growth out. That's pretty much as simple as you can say. For QQQ, it could vary. So you have tech stocks that obviously perform well in this environment, and rates really don't affect Apple, Nvidia, Amazon as much. But I will say it would affect Tesla, which is a tech stock as well, because they solely depend on rates for selling their cars, borrowing money, all these things. So you'll see Tesla's very affected by this as well. So charting NFP levels. How do you chart the levels? So before the NFP print, which I'll mention, every NFP print is the first Friday of every month, and it's released every month. So before the NFP print, you want to look at the 1 week chart or daily chart, and you got to identify support and resistance. After the print, you can then see you see the daily high and low of that, and that would be considered my NFP levels. It's that simple. So it just creates that range for that day, from the high of day to the low of day, and you can even use a box to make the range more visual and stand out. So focus on the different indices' reaction to NFP data. They may behave differently due to their global revenue streams. And as I said, small caps can show exaggerated reactions to NFP data. So here's some strategies for trading the NFP releases. Watching pre-NFP trends, setting up price alerts, so you can put price alerts on these levels of ones that have happened maybe in the beginning of the year and so on. And then notice, do they align with obvious support and resistance? So then real-time versus post-release. You can trade in the first 30 minutes after an NFP release, depending on the good or bad data and the reaction. And so Oftentimes you'll see like a good NFP print, the market just starts to go right away. And so that's a good sign for day traders that you can just get in right away and you'll see like, okay, this thing's going to start going. And the market always reacts to NFP. But the thing is I like to since I'm a swing trader, I like to see the low and high play out before just rushing in. So it's a hard thing to kind of operate. So for me, you don't know where that day is going to close until the bell rings. So that's kind of the hard part. But it's still, you can day trade it if you want and stuff like that. Risk management. For day trading a release, it's very important to have a stop loss set due to the increased volatility. Swing trading gives you more room to manage. And then let me just add, often you see the market react right away to good NFP or bad, but sometimes it may take time to digest. No other economic events for that week, like ER, there could be other data releases, news clips, stuff like that. And we do post these levels in the Three Stacks Education channel, so you don't have to scan through all the economic calendars because that gets tedious, and that's where all the time comes from. So you could just refer back to the education channel and see like we have everything posted from every NFP release this whole year. Now let's dive into some charts and I'll do a live demonstration. I'll demonstrate how to set up a trade based on expected reactions to NFP data. All NFP levels are posted, as I said, and now let's take a look at SPY, QQQ, and IWM. Let me switch over here to TradingView.
Yes. Yeah.
So I like to put it on the daily, and we'll see that. Let me check my notes to make sure I'm right, but I believe the last NFP print was August 2nd. Well, you'll always know it's the first Friday of every month. So here's SPY. What I like to do is August 2nd right here, high and low. That simple. And let's see what kind of happens here. Like, let me draw a box just to kind of show. You could even do this. But if you drag this out, look what happens. Resistance. And then it lifted up. This was another level that it tried to hold here before it fell through on that bad week we had. But still, look, it came back up, tested, resistance, it finally broke through. Same with the top level. It was resistance turned to support. So you can see like this is obviously a zone that institutions are trading around. I don't bring it back like that, but that's just to show you that like these levels actually do play out. So sometimes I will draw a box right here to keep it. Now let me add a few more just to kind of give a better insight. So before that was July 5th. Which would be right here. And it's the same thing. Like this is how crazy this plays out. Just draw a box. I'm just doing this so you can have a better visual. So it's the same thing. Look, this range from July, which was last month, it set the bottom, did it not? So boom, that day you're like, oh, that NFP print must have been good. We started ripping, came back for the retest of the top, and it just kept going. So that was bottom. But then you see we topped out here halfway through July, which is also seasonality in the market. So you have to consider these things. Like halfway through July is the first half of July is very strong, and then it starts to fade away. So boom, look, we come back down. You start panicking maybe here because we lose these levels, but look, it's like a magnet. It's like my fibs. It's still gonna respect it, comes back up, and then rejects the top before we end up going back down. And pretty much right here, you see that's a whole month that passed by. This right here is that bad, like Black Monday, pretty much. Now right here is. But you start to see like there's signs of weakness. We even came, so we lost that level hardcore, came back up, still look where we rejected. So it creates a support and resistance zone, and it's always going to be respected. So even till this day, look at this zone the past few days. Where are we finding support at the top of this NFP level? So for me, this is like the best way to gauge macro, because this will tell you where every other stock is going to probably end up. And for me, I've been kind of fading away from using fibs on the indices because it's way more volatile. So they're not as accurate in my opinion. I still put my COVID fibs on, but this gives you a way more accurate depiction. Let me add one more level here to see. So 6, 7. So June 7th. And look at what we have. So this is where it gets tricky when you start stacking them all. So this is 3 months, June, July, August. What happens here though? You see how this June print aligns perfectly with the top of the last one from August that we had early in the month? That level is the same level. So that it just like re-solidifies. You start to lay these things out and you're like, wow, this makes sense. Because remember I drug this back. What happened? This is a clear resistance area. So then this is where it can get tricky, because you don't want to have all of these start overlaying each other, because then it starts to get confusing. But there's a way to do it. And so pretty much what I'm just trying to say here is these levels are respected because this one is more added confluence to that print. So obviously something is here that institutions see, which to me is saying like this is a huge institution level. We rejected, came back. So this area from here to here is even more solidified in my opinion, because now you have 2 NFP prints in the same area. I will do this for every NFP print for the year. And then it just paints this picture of like, oh, this makes sense. So if all we had to do is you missed this huge move down like everyone did, all you needed to do is wait for confirmation to get back into this zone from August. And that's what happened. So to me, this first day close over is a signal. Oh, look, we're back in this zone. Next day, retest of the low. Then you just start flying through. Then this right here, this resistance turns into support, and then look at these gaps up. That's what I'm saying. Once you see in between, these are areas that just start to fly, because this is the clear resistance. Turn to support right here. This is still considered resistance. And that's why like you could put resistance up here for just like the top of the chart. But that's not really how institutions trade. So it's like these block levels you'll start to see. And then look, this would be just like a no trade zone pretty much. Unless you're swinging. This is like load calls. Start selling them here. Even here would be like that. That's why 2 days ago, everyone's panic selling. To me, we're just holding this NFP level. So it's a clear retest. I'm loading calls this day, honestly. And look at what we get. Next day back up for an inside day. And I'll just add this. Go to the 1 week. This is the highest close we've ever seen on SPY for the weekly on record. Tell me that's not bullish. So that's how you gauge these. Pull up the weekly and it's even more clear. Look at this. Dip below, but they held it back up, brought it in, closed. So even though this week we dropped that much, we still closed into this August NFP range. That's bullish to me. That means they're not going to let this market fall quite yet. And look at these powerful weeks we've had. Where have we seen a bigger rip on SPY? Probably never since I've been trading. That's the powerful 3 weeks where so much money can be made. But everyone just wants that pullback. And we never get it. So that's usually how the market works. Now let me switch over to QQQ. So pretty much you can go back and do that. You'll see like these other ones probably align with some of in here. There's probably NFP levels. And I just recommend go and start doing that for every chart. See, this is my NFP chart. So just set a new setup on TradingView and start to do this. Now let's go to QQQ. So we got August 2nd. That's the NFP print. You could even draw your box here, but it's the same thing. We dip below, we come back. It's trying to act as resistance, but not really because we're getting higher closes into it. So to me, if you worry here, we closed here, but then this is confirmation that it's a magnet. We're coming back up. This would be the spot to load calls, in my opinion. Even here is bullish because you're still closing above this previous candle. Then you start getting gaps up. That's what you start to see. Now let me go and add another level here just to show. So July 5th. Pretty clear to me. That's a resistance area because even though you shoot above it, it's safer to put the resistance below, in my opinion. This is where institutions are looking. They're not looking at resistance up here. That's what everyone wants to top tick everything. Nope, it's better to fly into momentum, and they're locking their gains at this level. So to me, this is where we're headed on the Qs. We got to come retest this NFP print up here. You also see there's a gap right here. Inside day to close the week is usually bullish because this is just digesting right here. It's like basing. So we're going to go test this up here is what I think. Also have a gap here that we're holding as support. But you'll start to see in between these levels, it's like flying straight up pretty much or straight down. You see that? Now let me add one more. Six, seven. And what I like to do is I'll go in here and actually add text. So June NFP high. Boom. That tells me right here. So I don't get any of them confused. I will have every one of them marked. And like I said, you can draw a box in here, but that starts to get cluttered when you have 8 NFP prints on your chart. But you get the idea. This one created bottom for the month. That's what's so cool about it. So now I'm like, oh sweet, we're just blowing past this. We're just going straight up. So into the next NFP print. So that created the bottom range. The next NFP print created the top range for July. And just these are in between areas. So to me, if you're swinging, this is amazing. This is how you can gauge like great times to swing. This NFP print from June, look at the support it's had. And like I say, it's not necessarily hard levels. It's like fibs. That's how I treat it. That's a magnet area. So institutions are respecting these levels higher than anywhere else. And now you have a way to identify them. Even here, we lose this. We get the new NFP print. But boom, look, we have resistance in here. As this was support pretty much until we gapped down. Now we came back for the retest of the June NFP levels. Some struggle, but still bullish. Gaps up. Now we're just in between these from July and June. We're trading in between these NFP prints. And that's what tells me we're going to go test probably 490 on the Qs. Even though QQQ is lagging right now behind SPY and IWM. So tech is very volatile right now. But you get the idea, like, see, this plays out, and this gives you macro support and resistance instead of like, oh, I don't know where to put my support and resistance. To me, I'm just learning the more I do this, it's all institution levels, and they laugh at technical analysis because they don't even use charts. They're the ones who make the levels that we chart, which is funny. So if you can learn how to trade around institutions, then you just don't have to trade all the time. Like, just let a trade fall into your lap, and you're not going to catch them all the time. And you don't have to catch the whole move. But I know guys down here who are saying load as much as possible, and they're still holding. So imagine a move that you lose this NFP level, but you know, like, we've been falling for this many days. It's due for a correction bounce, especially when you see this much volume, bring it back up. That's ridiculous right here. So that's bullish to me. Otherwise, if this was like another red candle, we'd probably continue down. But that's a huge volume candle, and we get sent right back up. So imagine taking a even right here at the top, 435, and now we're at 480. That's a $50 move in 10 to 12 days. It's pretty crazy to me. Now let's go to IWM. Same thing, August 2nd. Here's our print. Mark the high, mark the low, label it. But it's no coincidence. Look at the bottom. The bottom was resistance. We were struggling here for a while. But this candle, you get one solid close in this zone. This one closed right below. But look at this candle. It's still creating a higher high right behind this. And a higher low. That's bullish. And you get this huge gap up. It's no coincidence that this is where the body is for that open, right on top of the high of this NFP print. And then the rest is history. So let me go and add a few more levels just to make sure it's clear. So 7.5 again. This is where it gets tricky because I've noticed it gets more cluttered on IWM because it's like it just doesn't trade smoothly as the others. But still, look at what July NFP print did. Set the bottom for the month again, just like the others, and look at these gaps up. Just incredible. But look at where we caught right here on that massive sell-off, right at July NFP print. So to me, it's like, look at this. This is just setting clear ranges that you can trade around. And I'll add a third one. So that's 6.7 again. Let's see. And see, this is what I mean by cluttered. And you can do different colors or whatever you want for each month. But look, same thing. This one just set the range. So this probably was a bad NFP print. I'd have to go and check. But look, we're just flat in this zone for a whole month, which kind of leads into the next NFP print. So you're like, okay, if we've been flat since this NFP print, we really need a good NFP print to send us up. And what happened? We got that good NFP print. And you're still holding resistance. Look at this, three days after that print, but you're still up, creating the bottom range, creating this previous support that we can go back and refer to because our chart says, and look at where we're holding. So to me, if you get a bunch of NFP prints stacked on each other, it's even more confluence. So it even gives way more weight that, okay, these levels should hold. And this is just something you probably have to trust in the more you do. So honestly, we all should have been loading down here at 200. And I told myself that, and I just missed. There's just so many entries down here that I missed, just chasing other things. But for me, I want to get better at doing that with IWM. So like maybe up here, there's no NFP prints up here. So to me, you're just going to have to go off of, look at all this resistance. We're going to approach highs. I do expect some struggle up here. But pretty much, guys, it's this simple. So then you can go back and do every other NFP print from every previous month for the year, and you'll start to see all of these correlate somehow. And they'll always be retested. You have to think of that too. Here, everyone's like, oh my gosh, we're going to just rip forever probably. Nope, look at that. These gaps down are insane, but you can see in between these levels, it's hard to trade. So that's why when you find support and resistance on your QQQ, SPY, IWM, that can gauge all your other moves. I'm a swing trader, so to me, this is like amazing to be able to gauge at a macro level to see how this all plays out. Pull up the weekly chart and it's the same thing. So let me switch back over here to the PowerPoint. All right, so I encourage you guys to practice charting these levels with the indices we just went over, but they also work on individual stocks. I've noticed such like the Mag 7, so I'd focus on the big tech stocks, the ones that make up SPY and QQQ. I have yet to venture into doing that on individuals, but I guarantee you, look at Apple and it's the same thing. Like, because that is the most weighted stock for the SPY, probably QQQ. So they're going to react the same way. And those seven stocks are pretty much the entire market of the US stock market. So I would assume they work just as smooth. That's my next step, is trying to implement these into individual stocks. Also, I'm hoping there's an indicator coming out from the guy that I learned this from. That will be game changing, to get an indicator so you just don't have to even chart it anymore. You can just have an NFP setup and just keep it clean. That's how I like to do it. Have different setups. I have my fibs, NFP, and then just flip through them. You don't want to have 100 things on one chart, then you don't even know what you're reading. So continuous learning is what will set you apart from the average day trader. I truly believe that. Technical analysis will only get you so far before you have to learn what data means, how it implements the market or impacts the markets. Everyone can be great at technical analysis, but that doesn't mean you're a great trader, which is crazy because I see some really great technicians who struggle at trading. So there's no perfect way to do this, and you won't find much info on this topic as far as TA goes. It's something I've back tested and made my own. I recommend you do the same. And it may not work for you, but at least it should be considered after I just presented what these support and resistance levels can mean. So thank you guys. That's our short class for today. It's recorded. I'll be posting this on YouTube and in the education channel. Don't miss out on future sessions. There's a ton to cover and share. But really, NFP is that simple, guys. There's not much to it. It's just finding those dates on the econ calendar, correlating those highs and lows of that data print from NFP that day, and just let the chart show you what's happening. Now I'll open it up to some Q&A. If anyone has any questions or anything about the charts, let me know.
Actually, my question was, what happened when there's nothing above it? Because I was adding NFP levels to IWM and I saw that there's nothing up there. So
yes, so let me go back to TradingView. Let's see, where is TradingView? Here it is. One second here, sorry. All right, can you see that?
yeah.
Okay, so this tells me it's August 24th. We have the next NFP coming up here in September. That will set the top range, guaranteed, or the bottom. To me, I lean towards top because all this new data coming in is like not good at all, if you ask me. So that's where we got that sell-off from the revised jobs data that were down. They overestimated it by 800,000. Oh, what a surprise, for the past 12 months. So to me, you're starting to see all these revisions on data coming in, meaning we just keep going up, but the data is getting worse, and that's why they're going to have to cut rates. So to me, I would wait for this next print around here, first Friday, so September 6th right here. That's going to set probably the high. So we might go test these highs. That's where hand charting comes in. What I see here is, look at all these wicks above. No body closes. So to me, that's why I want to see QQQ hit this level, and I'll probably be all out. But more so, look at that candle. That's like an order block on the daily, if I'm not mistaken, because we start selling off here. So look at this area. That's where hand charting comes in. We've already peaked in. That's why I'm holding my calls, my December calls. But I'm right around the point where I'm ready to get out. So I'd put another level here. Look at that. So if we test this 221, I'll probably start trimming. But in this little area, I don't need to wait and see if we can break up, because every time you hit these new highs, it's that they're gonna start selling. Like, that's how they do it. We might go and rip up a little bit. Look, oh, everyone's probably so happy this day. They're probably buying calls up here, but look at where we closed. We shot back down. This next day, huge sell off. I'd rather sell into momentum. So to me, that's where hand charting comes in. But on the Friday, September 6th, we're gonna get an NFP print, and we'll probably be up here, which makes me lean towards that being the top range for September, because I know September is historically bad. So that's where other factors come in. Like, go pull up that chart I put in education, and you can see the past few years, like, September's bad, especially in an election year. That's where I'm expecting the pullback to come in, September, October, then maybe potentially rip into the end of the year in the election. So to me, it wouldn't be out of the question to come hit these levels and then just another hard rejection. Even making a new low could possibly happen. I don't know that it will be that extreme, but at least there's going to be some resistance. That's how I look at it. Hope that helps.
Thank you. Yeah, I mean, that's what I was looking at as well, is that on the 31st of July, July 17th, there was a high at 226.64, and then a sweep of liquidity on the 31st.
Exactly.
So, yeah,
and so another thing you could even do is, like, since we do fibs, just draw some fibs and see where we're at. Look, we're already in this sequence of my fib. This is the 707 level. This tells me right here I'm ready to start selling. So from this golden pocket, it's going to be, you're lucky if you hit the 886, because look at where that 886 aligns right with my hand level that I put right here pretty much. See how all of these are just confluences? So to me, we're already in here. If we hit the 786, I'm even more ready, finger on the trigger to sell, because I don't need, like, we can keep going, but I'd rather lock in 100% swing, since I got in down here at right here on this low.
Yeah.
This is the day I loaded.
It's going through a fair value gap. The bearish one, though, that filled at like 221.95.
Yep. But see how, like, pretty much when you get to that level, all of these things are just added confluence. So the fibs are going to tell you the same story, and your hand charting should be on point to pick these things out, in my opinion. Like, that's a solid candle. After these huge rips, you're not going to keep going up. You got to come back and test these levels. We had to come fill some of these gaps. And look at the gaps we now created downward that we've already filled. But here we go. Here's another gap. So to me, it would be like this. We get this new NFP print in September, and we probably come back and test August NFP. That would make the most sense. Instead of me having to put together like a 3-month thesis, it's better just to have just let it play out and see what happens. So that's
high is 214, right? 214.40.
What date?
August high.
Oh yeah. So August 1st, we sold off that day. Which makes sense too, because you're coming out of July, and July just pretty much held that whole way. You have an ascending wedge here even, pretty much. And it broke down.
That's crazy. That was crazy. August 1st.
Yeah, but no one would have ever thought, like, everyone thought the world was going to end and we're going to come back and test like 150 on IWM. Everyone was, but that's not how it goes. Like, this was a loaded zone for institutions. And to me, now I just got to trust in, like, okay, the flow even told me, and I just ignored it. You don't, like, if they start loading leaps down here by the millions, that means they're sending it up. That doesn't mean that they can start selling puts and all that short term, because that's exactly what they did. Load leaps long term, let their long swings cook while they chop it up and sell their options and put spreads or whatever they're doing. short term for that week. And look, they're still making money every way. As it goes up, they're making money. As it chops, they're making money. That's how it is. As retail, we have to figure out where they're at because we're not even on their radar. That's how little we are. It's where the billions are. These guys make the levels. That's why I say these NFP prints, those make the levels. The institutions trade off of data. So it's just an interesting thing that I've seen play out. And now it's to the point where I'm like, yeah, NFP is a must for me. That's like, after watching it and back testing it all year, now you start to see me talk about it more. I just think it's too hard to ignore.
Thank you.
Yep. So yeah, guys, I hope that helps. Anyone else have any questions? All right. Well, yeah, if you guys have any questions, just hit me up in chat. But go ahead and put at least those last 3 NFP prints on your chart and tell me what you see. That'd be awesome. So yeah, guys, until next time, have a great Saturday.